5 insights for you which I want to share with you. Insight number 1 is mortgage and protection advisors who are actively involved in the protection market are really enjoying it. They're loving the fact finding, the lifeline, they're loving talking to their clients about protection needs, and they're recommending protection products as well. They're also enjoying the fact that they go back and see the client 6 months later or 12 months later. They have a proper client bank now in which they're able to look at all the needs or the protection needs of that client. In other words, they've experienced financial advising and they're liking it. That's a fantastic insight for you as well coming through. So many people want to carry on doing that. Insight number 2 for you, the FCA. Now, the Financial Conduct Authority, of course, are constantly worried about the protection or the advice gap. There's not enough financial advisors to go around. So they've been trying to work on this simplified advice regime. And it's coming forward, then being pushed back a bit, and coming forward and pushed back. But it's happening slowly but surely. And the last incarnation is the advice you give is based upon what typical clients in your situation would always buy as well. So people like you in your situation took these products out. It's almost like buying things from Amazon, where you buy something and then they tell you that somebody else bought this product as well. We're witnessing simplified advice given at a fraction of the cost of complex advice financial advisors work to ordinary people like you and I. That's the change that the FCA are bringing in, and it will happen because they're keen to make it happen as well. Insight number 3 for you. There's a lot of mortgage people or people who want to become mortgage advisors bubbling. The market for people taking CMAP has taken a dive over the last few years. There's quite a lot of people coming in now who have got a secure job somewhere, they're earning good money to pay their bills, and they're taking their CMAPs slowly. They're time rich, you see, cash poor. So they're taking their CMAPs very slowly, and they will qualify in the near future. So when the mortgage market picks up, there'll be a lot of people looking for positions available to them. Number 4 for you. A lot of boomers and Gen X's, particularly the early Gen X's, are approaching retirement now, or the time when they think they want to retire. COVID made them think about it. Many realised they couldn't do it. These people are ordinary folk, like you and I, who've got pension pots, sometimes more than one, and they really don't know what to do with their pension pots. They're reticent to go to a full-blown chartered financial advisor for advice because of the cost implications. But they can get information online, of course, the likes of Money Supermarkets and Martin Lewis and people like that. But they can't get individual advice because there's no avenue for that. So that's an example where there's a demand for simplified advice without the costs incurred of complex advice situations. Last one for you, number 5, mortgage advisors. Many have pivoted over to specialist lending in the last few months or year since the buying homes, first-time buyer market dried up. Now, specialised lending is for bridging, seconds, development finance, that sort of thing. And they're realising that the customers that they talk to is a very different sale to a personal customer. Essentially, specialist mortgage advisors talk to business owners, business people, entrepreneurs, people who run businesses, because they're developing and bridging and renting and those sort of things. It's a different sales process to dealing with an individual. It's B2B, not business to consumer. It's a different sales process. Some are grasping it, some are not. Therefore, it's just changing the way they operate. So where does this leave us then, all these insights? Where does it leave us for 2025? Well, I think the housing market will rejuvenate. It always does. It's cyclical. Whether it will be after the election, into the autumn, maybe next spring. But it will, and there's a pent-up demand of people who want to buy property or move or whatever it is. Now, I think mortgage advisors can slip back into what they used to do 2 years ago. In other words, dealing with lots and lots of different people, new business coming in all the time. Next customer, please. A bit like the supermarket, isn't it? Or they can pivot their business model into more of a financial advising, protection advice model, which will allow you to operate in a very different way. The thing about financial advice models is they don't have that cycle. Pure mortgage, ups and downs all the time. Financial advisors don't have that issue so much. It's a constant stream of income that they receive. I think mortgage advisors will either go back to doing what they were doing before, or they will pivot to the new model of financial advice.